I don't think the capex trade really matters all that much. Like, to a certain extent, right? If capex falls 50%, that's a problem. That's not my expectation. I just don't think it's going to continue to rise at the pace in which we've come to expect. That puts pressure on certain areas of the AI trade. Well, it really could benefit others. Now, we are going to come back to that clip in just a moment, but I want to read you this post again. I think this is the second time on this channel. I wrote this post. I say, quote, "I have to say I'm growing pretty bearish on the semis trade. I know that sounds stupid. Hear me out. Amazon just had its worst losing streak since 2006, now down 14% from highs. Microsoft just had its largest earnings decline in years, now down almost 30% from highs. Meta's down 16% from highs. Google's dropped 6.5% in a month. S&P down 1% from highs. That means Microsoft is underperforming the S&P 30-1. That is, I don't know if we've ever had a ratio like that ever before. Okay, I know the markets are freaking out. Algorithms are indiscriminately selling everything tech, but this is easy to see. Wall Street is saying, quote, slow down the capex spending. After all, historically near debt-free mega caps are all of a sudden going into debt to fund this build-out. What do you think happens to Microsoft stock if they announce another capex raise next quarter? Meta fell 78% in 2022, largely because of spending concerns on the metaverse. When Wall Street talks, CEOs listen. But look, cutting capex is not my base case this year, but I'm not expecting further significant raises. You might even start to hear companies say, quote, we are not anticipating any further capex raises for the immediate future, something like that. Translation, NVIDIA's massive year-over-year growth days are over. Mag 7 is not all of NVIDIA's business, I get it, but it's a huge chunk. Look, I'm not calling for an implosion of capex. I'm just saying if Amazon spends $200 billion this year, they're probably not going to spend $250 billion next year. They're probably going to spend $200 billion next year, right? Probably no change in capex. Okay. I write here, the semis, materials like copper, nuclear, data centers, all of a sudden would be priced for flat or declining revenues in the future. The flip of sentiment has already started. When investors go from rewarding companies for spending to punishing them, it's only a matter of time before they cut back the spend. This does not mean I'm bearish on the AI trade. The immediate winners would be the hyperscalers that don't raise capex, that continue to invest $200 billion a year into capex and data centers, but do so at a responsible pace, okay? Those would be the winners. Software would have less disruption risk, presumably. That would be the short-term reaction from this, okay? Now, I think more, medium, long-term, software is going to be a stock picker's paradise, okay? Some of these software companies are going to do exceptionally well and integrate AI and do so in a very, very good way. Some of them are not going to be able to integrate AI as well and be displaced, okay? Stock picker's paradise. But for a moment here, I don't know how many quarters into the future, all software is treated as disruptable, even though a lot of it is not. Now, halo stocks, think of boring companies. Think of Coca-Cola and Pepsi and, Keurig Dr. Pepper. Think of oil companies. Think of Walmart, right? These companies that will use AI to their benefit, raise margins, blah, 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 okay? Just because hyperscalers stop raising capex guidance by $25 billion a quarter doesn't mean AI is dead. It means the attention flips from the builders to the creators and benefiters. It's not going to be a moment of, quote, the AI trade is dead, maybe briefly, but instead a moment of flipping from building to who is monetizing. The only companies that have really monetized AI so far in any real numbers are the semis and semi supply chain. Boring Halo stocks, coined by downtown Josh Brown, could be winners. Software that executes, robotics, healthcare advancements, etc. You might soon beat the first mission of the game, a very long game, the hyper building phase. The building phase will continue, but instead of Amazon spending $250 billion next year, they spend only $200 billion, the same as 2026. Not an implosion of capex, but a plateau. Next, who are the real winners long-term from AI? I know I'm early to this, but the writing is on the wall. Okay? So I don't think the AI capex trade determines the outcome of the AI trade, like on a quarter by quarter or year by year basis, and how much the hyperscalers are spending, right? I just don't think there is a very strong argument for that. Sure, for Nvidia, of course, but Wall Street is now punishing Mag 7 for over investing. If they were to come out Tuesday and say, look, we're not raising capex for at least the next 12 months, those stocks would be up 5+%. Microsoft would be up 12% on Tuesday. Okay? Nvidia would fall 20%, 15%. Software stocks would have a really good day as well, right? So I would just heavily push back on this narrative.
That speaks to our view. This is a deep seek type moment that's a golden buying opportunity for the winners.
Sure, it's a golden opportunity for the winners. But Dan, you admit it as much as I do as well. There's going to be plenty of losers out there as well. It's not just going to be about slam dunk, everyone's going to win.
Of course. Look, is Adobe a potential loser? Is software names like, UiPath, some of these other, the pure play names? Yeah.
Also heavily disagree with UiPath being a loser. Just, again, my opinion, just to put it out there. UiPath dominates the RPA market, okay? They are integrating AI and doing so very well. Maestro is their platform, kind of like Palantir's platform, what a lot of people compare it to before it was popular. Maestro is designed to orchestrate AI agents, software bots, and humans in complex workflows, right? Who gives a shit if you give, what is it, Anthropic's, co-work or whatever it's called, to 100 employees. They're just off doing random shit with it and not working collectively, not doing tasks and doing things that are productive. Who cares? Maestro is the central brain to all of this. Okay, so I would really push back on that. UiPath is one of, I believe, the clearest winners in AI software. So I would think Dan Ives probably doesn't know much about the company to like point them out as a as one that could lose, right? And a lot of people are going to push back on the next stock he calls out here, which is Adobe. So let's continue on.
But is Salesforce, ServiceNow? No, I think Salesforce, ServiceNow are going to be core parts of the play in the AI revolution, the use cases, because today it's really only Palantir that's shown it. I just think right now that the street is miscalculating the ripple effect that we're going to see across tech. And I think what you're seeing here is obviously just a massive dislocation. I would say in my career, it's the most disconnected call that I've ever seen, specifically the software sell-off, where you're essentially treating the sector like it's a structurally broken sector.
No, come on, Dan. How many times have I used brilliant AI? And I'm there. I get the AI is going to be amazing. I've used brilliant AI software and asking questions that I don't need to ask my tax man. I don't need to go to a consultant for. I don't need to speak to my accountant. I can do it myself. That's why people are worried about this stuff.
Look, and it's a great point. And remember, this is a fourth industrial revolution, the most innovative technology we've seen. But the install base in enterprise with these software players, the hundreds of thousands of customers, I mean, it takes 2 years a lot of times just to get a demo in some of these companies. So that's really, look, that's the moat. When you think about the barriers to entry and exit for these software companies, that they will play a huge role in the build out of the AI revolution. I think that is really the disconnected part. Are there pure play names that are going to be disintermediated? Yeah. But I think the street is misfiring here relative to the subsector that you're seeing in software. And I think in terms of the AI trade, I mean, when you come out of earnings, you look at capex, and that validates what I view as really, we'll call it a third of the way through this build out.
Yeah, look, Dan, I hear you, and I agree with a vast amount of what you're saying, but I was talking to the CFO of SAP the other day, a man who's right in the eye of the storm. And I said to him, what do you think about this capex spend? And you've already said in your first answer, follow the capex. And he drew my attention to something which kind of I knew about, then I've forgotten about, then I remembered again, and that was dark fiber. And he said, look at the amount of dark fiber that's still in the ground from the boom that we had that you and I remember so well, Dan, in the late 90s, early noughties. He said there's a lot of infrastructure which was laid down that nobody ever used. And that, I guess, is a bit of the worry.
Sure. And look, and obviously SAP has a great vantage point. Ultimately, I view them as a winner, when it comes down to from the software side. But as someone that covered tech in the late 90s, the use cases weren't there. These companies were essentially backed by, called Series Z funding, that they never really had business models that were going to be able to thrive. They were PowerPoint presentations. Now you look at the use cases that we're seeing, and then you look at it's big tech. A lot of these companies have more cash than some countries, and I think that's what's fueling it. And the use cases are as real as we've ever seen in terms of where this is all going: autonomous, robotics, the future of enterprise. And I think that, look, I get the comparison and I hear it all the time, but this is a white knuckle moment. I think we look back at 3, 6, 9 months from now as an opportunity not to start what I view as a structural continued sell-off this year.
Okay, so look, again, I agree with what Dan here says, okay, with a lot of it. This is way overdone. It's I would add to his point, I think it's really algorithmic in nature. I think it's too early to know the companies that will truly be the big winners or not as big of winners. And I don't even think it's like a lot of software companies are going to go bankrupt or anything like that anytime soon. But there's going to be some companies that really excel with AI, that fit perfectly into their business models, that grow their moats and capture more dollars and all of that. There's going to be some companies that just don't execute very well. Look at Snapchat versus Meta. I remember using Snapchat 15 years ago. Okay. I remember Snapchat and, well, Facebook was a little bit before Snapchat, but around the same time, like, Facebook was not the company that it was today. Facebook really did something well, right? Versus Snapchat. And look at the differences in those two companies, right? That is going to be more or less what you see within software, okay? Within, I think some of the tech sell-off is crazy. Like, what does Robinhood or Bitcoin have to do with any of this? What does Reddit have to do with any of this, right? There's a lot of algorithmic selling. Specifically in software, though, there's going to be companies that do a really good job integrating AI. There's going to be others that don't as much. I would really strongly disagree with Dan Ives' viewpoint of capex. As long as capex doesn't implode, then you're fine, okay? If capex slows, like the growth of capex year over year slows, that's bad for the semis, that's bad for nuclear, that's bad for energy, that's bad for certain areas, but that's not bad for software. It's not bad for Halo stocks. That's not bad for the hyperscalers that scale responsibly. So I would push back on that. You don't necessarily want to follow the capex, because what happens if capex doesn't get raised anymore? You're going to think the AI trade is dead. In fact, it's entering the next stage of monetization, of building on top of AI, which you're seeing a lot of that right now. Look at Claude. Look at all these companies coming out with AI innovations, okay? You are rapidly entering the building phase, not the build-out phase. So you want to be looking for stocks that are building, that are executing, okay? ServiceNow, I agree, probably not going anywhere. Salesforce, probably not going anywhere, okay? UiPath, probably not going anywhere. You know, Zeta, Rubrik, cybersecurity stocks, probably not going anywhere. But which ones are really going to be successful in integrating AI? Again, I would disagree. I think UiPath's Maestro is exactly what you need at this moment. Yeah, there's breakthroughs with vibe coding and AI agents, and you know, that's great. But you need a platform to, you know, make these things work together, to solve problems, to validate that they're doing the right things, right? Maestro is the platform for that, okay? UiPath's key product offerings. Autopilot uses generative AI to allow users to create automations using natural language. Clipboard AI leverages AI to handle unstructured data, a common pain point in traditional RPA. And Maestro, designed to orchestrate AI agents, software bots, and humans in complex workflows. Security and governance. Unlike many AI-only solutions, UiPath provides the deterministic governance required by highly regulated industries, which helps prevent AI from making costly, uncontrolled errors. Again, you can't just give employees access to all of your data to let them go crazy with AI agents, right? That's just not a thing. UiPath really has the full tailored platform here to handle complex organizations and deploying of these agents, right? So, you know, I would push back on some of the things Dan Ives says here, but generally this is a white knuckle moment. This is a you just got your ass whooped moment for no reason, okay? And now you're looking around saying, you know, what's going on, you know, in the stock market sense. What am I going to buy? What's going to do well? What's not going to do well? And I don't think the capex cycle is the dominant driving force of this at this point. I think we've bridged the gap into the monetization phase, the disruption phase. And that's great. This is opening the door for a lot of opportunities. Now, you know, could short-term things happen? Yeah, of course. We have Fed Warsh, there soon to be Fed Chair Warsh, that a lot of people think is more on the hawkish side than some of the other candidates like Rick Reeder and some of the other guys, Fed Waller, that were in the running for the Fed chair. I think Wall Street thinks he's too bearish. I don't think he's nearly as bearish as Wall Street thinks he is. So I think the confirmation could actually be a positive surprise that he's not like a super bear. We have the Supreme Court ruling on tariffs probably February 20th, if not February 24th or February 25th. So maybe as soon as this Friday, if not next Tuesday or Wednesday, could be the big dates to watch. I think Wall Street's pretty bearish that the Supreme Court's going to shoot down Trump's tariffs. That would wreak havoc in the bond market, be bad for stocks. Also, it's going to sway foreign currencies and the dollar a lot, so potentially create some volatility there. There's nervousness around the Iran situation. Okay, mix all of that together. Could we have short-term volatility? Of course. That is an opportunity, though, because look, if Wall Street's going to deem all of these stocks losers, you know, I don't want to say this because nothing is a recommendation or a guarantee, but in my view, it's a guarantee that not all of these software companies are going to be losers, right? Anthropic is not going to take over all of software. It's just not going to happen, okay? Especially for the, you know, vertically integrated software companies, okay? So, yeah, those are my thoughts on this. I think we covered a lot. Let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. Again, some of the big winners I think will be ServiceNow, UiPath, Zeta, Rubrik, you know, the cyber names. Clear and obvious winners, all of these stocks. You know, if Wall Street doesn't think so, they want to give them up for you know, dirt cheap valuations, I'll scoop it up. You know, I'll wait. I'm not expecting a V-shaped recovery in software, though, I will say. Like, this is not a COVID crash scenario where stocks are going to V-shape recover, in my opinion. It's going to take time. You don't want to be buying these stocks for a trade expecting them to double in 3 months, right? You want to give these stocks like 2 or 3 years to show their worth, okay? To execute and to dominate in AI markets, right? It's not going to be a fast conclusion that Wall Street's going to draw, that one day these stocks are shit and then the next they're AI winners, right? We're not going to move that fast in this. It's going to take some time for Wall Street to differentiate the winners and the losers. But I do think more medium term, 3 to 5 years, these are big wealth creation events that I have to take advantage of. Okay. I also think the boring stocks can work. Stock like an Elf or a Keurig Dr. Pepper, or APA Corporation, a Chevron, a Marathon, you know, some of those boring stocks can do very well. I would stay away from the high value names like Walmart, Costco, right? That their valuations have just kind of ran wild. But there's a lot of reasonable valuations beneath the surface. Healthcare, it's going to be a lot of AI innovation in healthcare. You know, you could start to pick the winners in that if you would like to as well. Okay, a lot of work, hard to do when you're dealing with drugs. And are they going to get approved? Are they not going to get approved? It gets a little weird. It gets a little complicated. They move on headlines a lot. But there's a lot of opportunity out there. And I don't think it's tied to capex. I don't think it's justified, the sell-off you've seen in software and tech. And it is presenting a wildly attractive opportunity that I have to take advantage of. Let me know your thoughts again down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade and invest alongside us, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.